Welcome to our channel. If you want to invest in dividend stocks, follow these step-by-step instructions to build a portfolio that generates regular income alongside potential capital appreciation. Step 1. Understand the basics of dividend investing, including how companies distribute profits to shareholders, what dividend yield means, and how to identify sustainable dividend payments. Step 2. Look for companies with consistent dividend payment histories spanning decades. Dividend aristocrats and kings have proven their ability to maintain and grow payouts through various economic conditions. Step 3. Evaluate dividend sustainability by examining payout ratios, which show what percentage of earnings goes to dividends. Generally, payout ratios below 60% indicate room for growth and safety during downturns. Step 4. Diversify across sectors to reduce risk from industry-specific challenges. Include dividend payers from utilities, consumer staples, healthcare, financials, and real estate for balanced exposure. Step 5. Consider dividend growth rather than just high current yields. Companies that regularly increase dividends often provide better long-term returns than those with static high yields that may be unsustainable. Step 6. Reinvest dividends automatically through your brokerage to take advantage of compound growth. Over decades, reinvested dividends contribute significantly to total investment returns. Step 7. Hold dividend stocks in tax-advantaged accounts when possible to defer or eliminate taxes on dividend income, allowing more money to compound over time. Don't forget to like this video and subscribe to our channel.